Hello, my name is Tim Sutherland, and welcome to my mortgage channel. Recently, I had my assistant, who's part of Generation Z, reach out to her friends and followers, see what mortgage questions they had, as they will soon be entering the home buying arena out there. And they came back with quite a number of questions. And over time, I'm going to try to go through each one, put together a quick tutorial. One of the questions that came up was, can I qualify for a mortgage on minimum wage? The answer, of course, is yes. I shouldn't say of course, because people actually weren't sure if you could. But yes, qualify with the income, whatever that may be. And of course, that does come into play on how much of a mortgage you can get. We're just going to go over a very basic review. I'll go through here, and then we're going to play with some numbers. So I put the wage in here. I'm in Maryland, so I use Maryland's minimum wage. And then 40-hour work week. And it works out to the gross monthly I'll figure out there. Now we'll look at if there's one minimum wage bar or two. In other words, if two people go in on a house. Debt, I'm just going to use 10% in this scenario. Assume that out of your income, you've got monthly debt of 10% of that income. And that would mean if you have credit cards or maybe a car loan or something else like that. Obviously, the higher this goes, the lower you qualify for the mortgage part. This is going to outline a rough payment. And it's not all encompassing by any means. Number one, rates vary, tax rates vary, insurance varies, as does private mortgage insurance. So it's just an overview on what's possible, not necessarily what's probable. For the debt part, back over here, some of the examples of what's included is cars, credit cards, student loans, things that show up in your credit part for the most part, or items that you have to pay contractually in a monthly case or whatever that is. I would actually call it child support also if you have that, or alimony. Those would also be included. Items that aren't included in that debt-to-income ratio include cell phones, electric bill, current rent, which would go away when you move the house anyhow, insurance, 401k, coming out of your paycheck to save in 401k, or a 401k loan even. It's a retirement account, 401k or IRA. Those are not included in the debt-to-income ratio. And we're going to try to keep you around 43% below as we go through this. Currently, I'm working this up as if it's a Fannie Mae loan, which offers many first-time home buyers a down payment of as little as 3%. And for this scenario, we'll do it that way. Freddie Mac has 3% down. Another option is FHA, that's 3.5% down, but we're not going to cover that in this video. It will go up to as high as 50% debt-to-income ratio, at least for now, over some temporary guidance through Congress, but it could reduce to 43%. So we're going to do it using 43% debt-to-income ratio. The debt-to-income ratio is the total payment, and if you have an HOA, that's included, plus the other debt is a percentage of your gross monthly income. So I started with a house price of $110,000, which after 3% down is $106,700 for a loan amount. And down payments, closing costs, things like that, we'll cover in other videos. This is really just about a qualifying ratio. So if somebody's making this for minimum wage, they're working 40 hours a week for this, $110,000 house, I'll put the payment, give or take, in that area. Again, depends on many factors. And debt-to-income ratio is 42%. So yes, it is possible qualifying on minimum wage. Now, let's say we've got two people going in on it. Notice how the debt-to-income ratio dropped. Well, now maybe I'll go a lot higher on a house. So now you got two people on minimum wage. That'll get up to about 2.25. give or take. And again, many factors depend on where you're buying, for property taxes, home insurance, and the like. The interest rate you use is roughly where they've been. Does not mean that's where they're going to be when you find a house. So you have other factors there. Let's say they work their way up and now they're 4%. That's how the debt to income ratio went up a little bit. Now you may want to go down purchase price to stay up at that 43%, which is ideal. It's not the maximum. As mentioned, you can go higher on some programs, sometimes as high as 50, but it certainly allows for a comfort level right there. So now we have a couple of people at minimum wage that can go in together and get a home somewhere in the 200s. Suppose their debts are higher, so they got 20% debt. Notice how that jumped up. And see, rates are running about there. Now, because you've got higher monthly debt there, the debt to income ratio is higher. So now you've got to buy less in the way of house. That's how it drops down as we keep going. So now we're down to about $150 for a house, 2 people earning minimum wage. Go back to 1 again. Right there. That puts us close to that 43% mark. Minimum wage at 40 hours a week. Now let's say you're only working 35 hours a week. Boom, goes up. How do we calculate that when you're working on an hourly wage? We average it. So if you do apply, you put down that you work 40 hours a week, we are going to request multiple pay stubs. So we're going to start averaging. We're also going to look at what you made last year and come up with an income. Say, oh, just a heads up on where that's going to lay. But if you're working 35 hours a week, now you might be looking at about a $90,000 home. Keeps the debt to income ratio comfortable right there, and you can still get into a home. Talk of the minimum wage going up to $15 an hour, then that also will move you up on the home buying spectrum. So now you're up to about $140,000 for a house price if you're working 40 hours a week at $15 an hour with a 10% debt load. Now, if you've got a 15% debt load, it's going to affect this a little bit. So we come down to there. So now you're down around 120 in terms of what house mortgage you would qualify for. And note that if you got a home with an HOA, homeowner association fee, that will eat into it also. So let's say you find a townhome, it's got a $20 HOA fee each month. Notice how that went up a little. But you have a little bit less house to make that work. So an overview, what I'm saying is that yes, you can qualify for a mortgage on minimum wage. But there are a number of factors that go into how much of a mortgage you can qualify for. If you have any questions, by all means, leave a comment below. I'll get back and reply to you. You can contact me directly. Thank you for watching my video and have a great day.